Kawasaki. Kyle, thanks for joining us at the show. So why are we seeing this bullish sentiment for Bitcoin in your view?
Yeah, thanks for having me. And I think a couple reasons. First, we've seen a lot more liquidity come in. I think part of that has to obviously do with Binance coming in and converting a lot of their own coin into more traditional BTC. And I think the other side of it too is the fact that the Fed is hopefully closer to pausing interest rates than they are from continuing to raise interest rates, partly in lieu of what's been going on with all the regional banks, most recently within this past week. And in addition to that, hopefully they're committing to pausing and keeping interest rates where they are so that they hopefully can continue to see inflation coming down moving forward. And quite frankly, growth assets, including Bitcoin, have experienced a lot of declines from last year. And I think what we're seeing is a relief rally in the first quarter of this year so far.
You'll say crypto is going through a choke point with three major factors. What are those factors?
Yeah, I would say the first is obviously having to do with the interest rates that the Federal Reserve has been imposing all of last year. And again, their commitment to bringing inflation down has really been kind of the most pressure that we've seen on cryptocurrency and riskier assets. Because if investors can get safer yield inside, short-term bonds and they can get somewhere between 5%, it won't make sense to have, risky assets in the portfolio for investors that, are trying to look for safer rates of return. The other side is, and point number two, is really the regulation that's been coming. Gary Gensler, the SEC, has been very, very vocal about more regulation on cryptocurrencies in general, and I've been really had that in the crosshairs of the SEC and regulation with everything going on with FTX and Sam Bankman-Fried. And then I think the third part is you're seeing a lot of exchanges and on and off ramps really going through tumultuous times, and it's very difficult to get individuals and mass adopters on and off chain. And I think that's really kind of what's been causing a lot of kind of this 3-point chokehold on cryptocurrencies, is because if you want more buyers to come into the market to bring it up, you need to have vehicles in order to get that. Not everyone is going to be able to just code on chain, but they need those on and off ramps to really provide as a lever in order to continue to add to their Bitcoin and crypto positions.
So what would you advise clients in that situation? Would you advise them to buy a Bitcoin and keep it with the custodian, but because of these liquidity concerns and these on and off ramps with banks, try to self-custody instead?
It really kind of depends on the situation. I think a lot of custodians are really moving more and more towards, regulation and exchanges that are playing within kind of these guidelines. Crypto has been kind of the troubled child, so to speak, within asset classes. And as more and more regulation comes out and as more exchanges like the Coinbases and Geminis of the world are really providing transparency, really providing those guardrails to allow people to come on and off chain, I think it provides people a much better idea rather than trying to use some sort of offshore exchange or some kind of cold wallet or cold storage, because at that point, none of that is insured. And I think we've seen a lot of that with FTX and the issues surrounding around not having enough regulation. So as long as you're within the bounds of what the regulators are looking for, and that's continuing to evolve, I think that's the best way to play it. Not to mention as well, for a lot of the institutions moving forward, you have some sort of accountability and transparency here in the United States. And I think that's just going to continue to move forward as they try to find a way to be integrated in the traditional system.
So I want to bring up Balaji Srinivasan. He's the former CTO of Coinbase, and he's betting that Bitcoin will hit $1 million in 90 days because of hyperinflation in the United States. So what are your thoughts on that?
Yeah, in terms of the time span, I mean, his bet is as good as mine, as anyone other, as what's going to happen in the short term. I hope we don't go through a period of hyperinflation. Obviously, a lot of this is stemmed because of the fact of, banks having losses and then getting bailed out by the FDIC insurance. So I think moving forward, it's hard to say in the short term, but hopefully long term, with the Fed's commitment to continuing to have inflation coming down, we don't see a period of hyperinflation. We've gone through periods like this before in the past where major institutions were bailed out, and we've been able to kind of thread that needle, so to speak, between growth and not having this hyperinflation that we've seen, or what a lot of people are speculating on. But it's hard to tell in the short term. But longer term, inflation has been trending in the right direction. And again, Jerome Powell has been committed to making sure that inflation gets to that 2 to 3% target level for inflation annualized.
Do you see that happening? I mean, the FOMC is meeting this week. We're anticipating another Fed rate hike or the next decision. What do you think will happen?
I think that we saw this with the ECB, right? They raised 0.5%. I think the Fed has to stay committed to raising interest rates and combating inflation. If they don't, the word of the Fed is basically kind of worthless at that point. I do think that the Jerome Powell will need to increase interest rates by at least 0.25%, and maybe the tone changes and is a little bit more dovish. But I think it's hard to completely back off and say we're going to pause interest rates at this point. Now, they may come out and say that they're obviously been data dependent and data driven from the get-go. So there could be an argument to be made, but I think the markets would see that as a negative just because of the fact that this inflation is obviously higher than what a lot of people are looking for.
All right, Kyle, thanks so much. That was Gerber Kawasaki Investment Advisor Representative Kyle Clark.